Larry Gonzales with your housing market update for the first full week of September, right after Labor Day weekend. We got a lot going on. Let's get into it. All right, first, big three. What's going on with prices? Prices are pretty flat right now, and that's not a bad thing. It's not a great, but it's not bad either. Inventory, we're going to go through the housing market update from the Honolulu Board of Realtors, and you're going to see that inventory's actually gone up in August. So we'll take a look at that. And rates, rates, they started coming down at the end of last week. Well, they've been going up all this week, and we'll get a little bit into that here in a second. So what's the headline news this week? Well, no news is bad news in the mortgage industry, at least for mortgage rates. And by that, I mean, we don't have any inflation reports. We have very little in the way of jobs reports. And so what that means is there's just a lot of unknowns. And now you have all these Fed heads who are talking about inflation, and is inflation coming down fast enough, and have they done enough, and are they going to have to do another couple hikes? And anytime someone says we're going to hike the Fed funds rate again, guess what happens? Mortgage interest rates go up. The 10-year Treasury goes up. And so that's kind of what we're seeing this week. There's a lot of speculation on what's going to happen. But the Fed, to their credit, has said we are going to take action based on the facts, based on the numbers that are presented to us by the CPI, the Consumer Price Index, the PPI, the Producer Price Index, the jobs reports, and then the PCE, the Personal Consumption Expenditure Report. So those are inflation reports and jobs reports. And we don't have any of those until next week. So in the absence of news, interest rates this week have gone up on a lot of speculation. We did get an initial jobless claims report that came out on Thursday, and those numbers were kind of skewed. We'll get into that. And then we have, for me, what I love to see every month at the beginning of the month is the Honolulu Board of Realtors housing report, and we'll get into that too. And what that basically shows is we have a steady market. It's not a great market in the sense that there's a lot of inventory, but home prices are steady, and we'll get into that here. But let's first go into the initial jobless claims, because that's really all the job news that came out this week. And we had a short work week last week because of Labor Day. So we had a shortened week, or this week, a shortened week. So not as many people necessarily applied for unemployment. So the numbers were 13,000 fewer this week than last week. And then overall, continuing claims had a huge drop, a 40,000 person drop in people who are continuing to receive unemployment insurance. We want to get above 2 million. We just dropped below 1.7 million, like 1.674. So that's definitely not good news for the job market. But you know what? Again, it's a shortened week. And it also shows one other thing. People who are employed, the employers don't want to let them go because they are valuable. A good employee is hard to find. That's kind of what we're seeing with the initial jobless claims. And where are we at with interest rates? Well, again, last week we dropped to mid to high sixes. This week rates have gone up pretty steadily every day, although today we saw some improvement, but we are going back towards 7% for our VA rate. So what that shows is, again, no news is bad news for interest rates, and that Fed's tightening is starting to take an effect. We're starting to see that. Here's another one. Our consumer credit is at the highest it's ever been. Delinquencies now are for under 40. Serious delinquencies at 8%. And you got to remember, credit card debt is evil. You're looking at 25% interest on credit cards. You're getting late payment fees on top of that. Your credit score is going down. And the fact that there are more and more people who are delinquent in their payments shows that a lot of people they have no more savings, and they are relying on credit to maintain the lifestyle that they become accustomed to when they were getting free money. And they're not getting free money anymore. All right, so let's get into the Honolulu Board of Realtors housing report. So single family homes, this is an overall view. They changed it on me. It's a different picture this week, or this month, but we'll go with it. This is for the month of August. Median sales price, $1.11 million. And that's pretty solid for single family homes. Year over year, down almost 20% though in sales. And again, I'm not really interested in comparing year over year, because last year sales fell off a cliff starting in September. August was the last steady month, and I'll show you that. Median sales price for condos though, near an all-time high. All right, $515,000. That's pretty solid for condos, but down 17% sales year over year. But let's look at the monthly indicators right here. All right, closed sales. All right, down again almost 20%, but up 12.5% for single family homes month over month. And then condos unchanged, 422 last month, 422 in August. Median sales price, we already went over that. Average sales price month over month. Single family homes, we went from 1.27 million average sales price single families to 1.427. So that's a 12.4% increase in the average sales price of homes. And I think a lot of that has to do with maybe the single family homes that were sold were higher, so that brings the average up. But still, that's pretty high. And the average, even year over year, the average is now higher on single family homes. The median days on market showing a slight increase, 16 last month for both single family homes and for condos, up to 18. That shows that, you know what, the market is getting tired. The market is tired of these high interest rates. Buyers are tired. So homes are starting to sit a little longer. Still a seller's market, but that is good news for buyers. New listings up for both condos and for single family homes month over month. That is good to see. So new listings, we got a 20% increase, single family homes month over month. Active inventory though is still flat. All right, why? Because when the houses do come, they're going pretty quickly overall. But still, just not seeing enough inventory. The only reason why we're not seeing house price go up even higher is because interest rates are where they're at. So let's go over this. Median days on market. I love graphs. These are my favorite things to look at. You see that days on market was going down. It was going down. Well, guess what? August went up. All right. A big uptick. It's really only a couple days, but it shows a big uptick. And as long as rates stay elevated, we'll continue to see days on market go up. It just shows that increased interest rates are taking a toll. New listings. All right, I already told you, hey, we had a surprising reversal. Typically, after the summer, you see the number of new listings coming on market go down. Well, wasn't the case in August. Actually, we have more listings in August, so that's good. Last year, and pretty much every year, we've seen a huge decrease, but that just shows people want to sell. And some people, they got no choice now. They have to sell, so they're putting their homes on the market. Now we have monthly inventory, and we're starting to see a bit of an increase in single-family homes. Again, when the home prices are over $1.1 million, they're not going to go off the market as quickly. So you're starting to see a little more increase in the inventory, but we are still well below pre-pandemic levels for homes on the market. You know, if you look at the beginning of this chart here. At the beginning of November 2020, you look at that action, we had a much higher inventory, and that was because there's a lot of uncertainty. Remember, we were kind of just figuring out what was the impact of COVID going to be. But we haven't recovered, and it looks like we're kind of steady on monthly inventory, and it just don't see that improving anytime soon. Median sales price, interest rates in the 7s for almost a year. All right, I think October will be 1 year. And guess what? Home prices have stayed steady. That's what this chart shows you. Here's the other thing. If you bought a home and you expected to make a crap ton of money in a year, that's risky, downright, that's reckless. I will tell you that is reckless. Long-term home ownership is much safer. Just ask anybody who's owned a home for more than 3 years. If you have 3 years, you're crazy. I don't think you're crazy not to buy, but you're wasting money by not buying. I truly believe that, and that is ranked true for me every time I bought a home. What this should show you is, hey, we're straight line to slightly up. There's going to be no housing crash. We're at near all-time highs right now. And I tell you, as soon as rates come down, guess what? You're going to see those numbers pop higher. You're going to see them pop higher. All right, let's look at closed sales. This is a hard one to look at. I ain't going to lie. This is a hard one to look at. We have peaked last month, but we saw a slight recovery in single-family homes for a number of closed sales. Condos are flat, a little slight uptick with single-family homes, but we're still at the lowest single-family home sales high for the year since 1997, lowest condo high since 2014. Again, consistently low inventory is going to keep our housing prices high. Hey, what does this mean for buyers? Well, I'll tell you what. I have heard several times the media this week talk about interest rates going up to 9%. And I tell you what, I don't have a crystal ball. I don't think we're going to get there. I don't think we're going to get there. When, again, there's no news, it's bad news, and people speculate. You have Jim Cramer talking about 9% interest rates. Just don't see it happening. All right, I've seen them up at 7.5%. I haven't seen them go higher, but that's not going to happen. But what that is doing is that is scaring people from buying. So buyers, if you get rid of the chaff, all right, and you find a home and sellers are still giving seller credit, you're going to find an interest rate that, at least temporarily, you doing something like a 2-1 buy down that will cover you until interest rates start to go down. And then, again, once they go down, you're going to see the value of your home go up. And prices are still going up. I just showed you that. Prices are still going up. For sellers, hey, cancellations still happening. All right, every week I hear of another home going back on the market because the sellers, either they couldn't find financing or they lost the financing, what they were pre-approved for back in June or May, they're not pre-approved for anymore. So still a strong seller's market. Again, don't be greedy. All right, and that's pretty much all I have for you this week for the housing market update. A lot going on. Don't be frustrated if you're a buyer. Actually, this is an opportunity. When people are running, that's when you got to turn around and say, hey, what opportunity is there? Because there's always an opportunity. Every day a home is bought and sold. Are you going to be that person? And hopefully you will be. Hopefully you will be, because I tell you what, renting is surely not the way to go if you're looking to financial freedom and build a financial legacy for your family and yourself. All right, have a great day. Aloha. Oh yeah, and don't forget, don't give up the ship. It's all flying away. Don't give up the ship.